welcome to Risky Business, a show where we get to explore new and innovative ways to understand and reduce risk by bringing together some of the leading professionals in the transportation and the insurance industry. My name is Scott Grandys. I hope you enjoyed the show. Let's kick it on. Well, hello, everybody. Welcome to Risky Business. This is a time that I really enjoy because we get to explore all kinds of new things as it relates to risk and what causes it and what we can do to reduce it. For those of you who don't know me, I'm Scott Grandys. I love this show, and this is a good time and fun for me. And today I have, I can't just call you a friend, James. You're like my brother, seriously. So I've got James Wells with me from Acrisure Wholesale. He's out across the pond in London, so it's later there today than it is here for me. And we're going to go through some interesting stuff today. So before we kick it off and I get into my line of questions, James, why don't you let everybody know who you are, what you do, and we'll go from there.
Yeah, perfect. No, thank you for having me on, Scott. It's great to obviously, speak to your Risky Business and enjoy the other podcasts you've done. Yeah, so from my side, I'm a London broker, started in the industry in 2013, so this is my 10th year now. It's quite a specialist area being in Lloyd's of London, but we specialize in commercial trucking in the US, so that certainly keeps us busy day to day, being in the hub of insurance with other 52,000 people, trying to align business from about 200 lines of business from around the world.
Yeah. London's a cool market. I started going out there. Oh, geez. I think you probably met me when I first started going out there, right? Probably 7 years ago. Does that sound about right?
Yeah, I think we met in 2017, and that was the game changer from what we were doing on trucking insurance. And I'd certainly say from that point onwards, drinking the Kool-Aid and understanding that there's so much more out there with tech that we can use for underwriting and understanding insurance as well for placing and what the insureds can do in the industry to take it forward to that next step from that old school way of doing it.
Yeah. And I think, it took me a minute to understand the London market. And I've tried to teach like my dev staff and if you listen, well, you're going to hear some of the podcasts with some of the folks on my dev staff. I think people starting to understand really what happens in London to me is super important because it kind of rolls then down the path of all the stuff that the trucking companies are doing and the drivers are doing. What does it really impact and how does it get to you? So if you listen to my other podcast, you know that I get a mug for everybody. Laugh at this one. And I'm going to show you the mug and then I'm going to give you a little bit of shit because I had it perfectly timed out and you stood me up. So your mug, I always have a hard time doing this. Here we go. This is what an awesome matchmaker looks like. So we were supposed to record our podcast on Valentine's Day, right? And yeah. Valentine's Day is about matchmaking. And you are a broker in the London market and you match people together, right? So that was supposed to be my funny joke. You stole it. Anyway, so yeah,
we were sharing the trucking love, just not on the podcast. It's a belated Valentine's Day.
And there you go. Well, happy Valentine's Day.
There you go.
So anyways, I don't think folks generally understand what it is that you do in the London market. And I call it matchmaking because in my simple brain, to me, the most important thing is you find folks here in the States that have trucking insurance programs, right? Or whatever. And then you in the London market match them with capital that will back those programs, back the premium and back the claims, right? Is that a fair assessment? Are you a matchmaker like that?
We try to be. It's such an interesting place, and Lloyd's has been around for 335 years now, and it started in obviously the marine industry, and it's evolved over time. Even now you've got crypto, NFTs and those sort of things being discussed within the insurance industry. Trucking is obviously a big part of that, being in North America. A lot of that, obviously, we don't we don't touch the auto liability really in London on a direct side. That's more reinsurance side, and that's just a separate conversation in itself. But in terms of aligning interests with syndicates and capacity, that's what we do as a London broker. That's our specialist area. And up until probably the pandemic, day in, day out, you sort of coming at night, 8 o'clock, 9 o'clock in the morning, you prep up the submissions for the London market. And, for an example, you could have ABC Trucking based in Georgia. You have the TIV, you have all the information on the drivers and the units. You prep that up, you look at the risk, and then our job is to go and paint a picture of the insured and what they do, what commodities they haul, whether it's short haul, long haul, and go and get the best terms we can do in the London market with the partners we trade with that we've had long established relationships for. And we do that on behalf of our wholesalers and cover holders, again, that have traded with London for, sometimes they're new clients to London, sometimes they're clients that have been around for 4 or 5 decades and even longer. It's a bit of a moving target in terms of how it all works, but we have plenty of other brokers out there. There's 76 different syndicates in Lloyd's. There's 4,000 cover holders around the world. So I know we're focusing on US trucking, but there's a massive amount of business that's done in Lloyd's from all different places.
Yeah. It's spending I think 2015 was the first time that I was introduced to the London market. It's been a huge. Well, it's been cool to learn and cool to see things. And that's how we got to where we are today, because we saw that there was a need in the trucking industry here in the U.S. that, people weren't looking at the risk properly. And I think it all comes down to the little details that a lot of times people don't pay attention to here in the States. So, some of the stats, now this was a staggering statistic that I had heard from Mike Clifton back on one of our town halls earlier on about the London market and more specifically the backing of the U.S. market, right? The statistic was that on a roughly $30 billion worth of sponsored premium here in the States, the combined loss ratio was 110% for like 7 or 8 years straight. So it was a stinker, right? That's $3 billion a year being lost. So one of the things that I hear in the London market, specifically like with the technology that we've been building, which we'll talk about in a minute, and your role in all of the support that you've given me over the last couple of years here. I hear a lot that people come out there with all different kinds of things to say, this is why I'm different, this is what's different, right? What do you think generally, and you don't have to get into too much detail, but you can go as deep or as high level as you want.
Yep.
What do you think people that are trying to deal with insurance programs in the United States, what do they need to think about when it comes to finding capital in the London market and getting support in the London market?
It's a very interesting question, and there's so many different dynamics to it in terms of their role as if you're talking about a cover holder or just as an agency.
Let's start at the cover holder.
Yeah,
and then let's strip it back to what agents should be thinking about, because you deal with all of them, right?
Yeah, that's it. It certainly keeps us busy. So from the cover holder standpoint, the reason why they are cover holders, and we look at binding authorities as an example, and the binding authority is a contract that a syndicate, as an example, can give underwriting authority to a US cover holder to underwrite on their behalf in terms of giving them set parameters for rates, wordings and guidelines for what they can underwrite business to. And the idea is that, cover holders are experts in their local field. They know the retailers who are going out prospecting this business, and they should know the good guys from the bad guys who are providing that business. And London, from the underwriting standpoint, they're sort of 2 steps away from that, because they've got the London broker who's bringing them the business, and then they're also, they've got the cover holder over there. So the cover holder's closer to where the business is, and that works well. And it's been a pretty efficient process from Lloyd's standpoint in terms of cover holders having that authority and underwriting expertise. And cover holders over the years have done a very good job with what they've got. Predominantly, On the direct binding authority side, that's been for auto physical damage and motor truck cargo business, and then they've split out the auto liability stateside with carriers they've got stateside. So that's where it's worked well. So they've had the AL market, and then they had the FISDAM and the MTC from London, and that's sort of changed over the years with shippers and motor truck cargo and forms and bits and pieces like that. So, but it's a process to become a Lloyd's cover holder. It can take a bit of time to become a Lloyd's cover holder with all the regulations that are in place. But once you've got that cover holder status, it opens up quite a few doors in terms of capacity and options. And there's always different markets doing different things that can really benefit you as a cover holder writing business to your agencies. And obviously our job is to help our cover holders or agents with that process and try and find them the best opportunities that we can do, and align them with syndicates that want to write the business.
Yeah, that makes sense. So what do you think? So if I were a cover holder, just got it, and I got a trucking program, that I want to get started, and I want the London market to back me, right? What are some of the things, again, high or low level, wherever you want to go with this? What are some of the things that I should be thinking about? What should I be asking of the agents and ultimately the insureds that would reduce risk? Like, what if you could pick like the big three things? What are they?
I wouldn't say London in terms of telematics. It helps from that portion, and even being stateside back in 2015, I still remember being in like South Carolina, where they're talking about lytics, doing all the telematics and having the whole Big Brother scenario with the truckers. Telematics is very handy, but will it actually change the day-to-day operation of the driver? Arguably there's cases for and against that. Obviously it helps in terms of subrogation for not full claims. When you've got that out, that's a different tangent itself. But I'd say the data that's available now that you're able to drill down into that we weren't able to drill down into probably 5-6 years ago, the transparency that comes with that's certainly a key thing from a cover holder standpoint, being able to show that. And also, the more data you have, depending on what type of data it is, it opens up opportunities to deal with different syndicates. It's pretty hard, I would say, these days to get something going without historical data, because you need that sort of trust from syndicates and underwriters that, you have a proven track record that you're going to return a good amount of income and, good loss ratio for the London market. So, the historical data in the tech to be able to showcase that is certainly something key if you want to open up doors to capacity with London.
Yeah, I've definitely seen that too.
Yeah.
So another thing that I think I've seen, and we're going to get back to the agents in a minute. Another thing I think I've seen is, I think the industry generally has relied on kind of buckets of assumptions as to what is actually causing the risk in the trucks, right? I've heard you say time and time again, just because they're in California doesn't make them a bad risk, right? But seriously, right?
Depending on who you ask, and this is what makes a market. So bringing it down to the broker level, there's certain syndicates that have no issue with California. There's other syndicates that think that's an area that we want to avoid. Same for something they would class as a new venture if it's under 3 years of business. We don't want to touch them. They're going to cause loads of losses. Other syndicates are a bit more relaxed, or MGAs are a bit more relaxed on that. And then that's our job as a London broker, is to find those, out of all of those 76 syndicates, not all of them right, North American transportation, but there's a good number of syndicates, markets that do that. And it's our job to find the good ones, well, not the good ones, but the ones that have those viewpoints that align with what our cover holder or wholesaler or the agent is wanting to achieve from London on that standpoint. So, we could go and see Syndicate A or MGAA, and they could say, you know what, we don't want to write anything in Florida if it's under 2 years in business, because looking at all the data and the business we've written there over the last 5 years, that's north of 100% loss ratio. Whereas you could go and see another syndicate and they could say, you know, we've got no issue with Florida. Yeah, we've had losses here, but we're not going to penalize them as much for Florida because we haven't seen those losses. So it's about having those dialogues with those markets and then being able to find the right partners for our agents depending on where they are. That sort of answers what you're looking at on that bit.
Yeah, it does. It does. You know, and I look at things like, you know, if you think about driving records, right? I mean, how many programs do you see where pretty much the driver criteria is the same, right? And a few years of experience, no more than 3 speeding incidents, no more than 2 speeding incidents in a crash, you know, all this stuff. And I think, I mean, you know, some of the stuff we're working on and really analyzing that data. That's what I'm getting back to, is the data, right? I think the data is critical because it's going to tell stories that maybe we haven't heard before. Like, you know, we're looking at all this crash stuff, and, you know, one of the things that I've got Camille working on is take a look at crash data and take a look at the city and state in which the fleet is established, and then cross-reference where the crash actually took place. We may find out that 60% of the crashes for fleets that are domiciled in Florida actually never have a crash in Florida. They have them in North Carolina. Yeah, you know what I mean? So I think the data is critical because it's going to tell us the right story. And
and the thing with that, sometimes you can throw the baby out with the bathwater, and you could penalise some of the good insureds that are in those states that are performing well, where we have seen, you know, let's load the state of Florida by 20%, and they could, you know, they may not be in a urban area, they may be in, you know, a rural part of Florida or somewhere else, and, you know, they get penalised with some of those insurance companies trucking companies that have had, you know, those adverse losses. And then that's where you've got the good guys being thrown in with the bad guys who are running at 110% or have caused losses for the market over the last 8 to 10 years. The mean that it's doing that, so the insurance premiums are going up for everybody. So, you know, the transparency is key with the data we've got now and that sort of area. And then even then, you've got the driver criterias, and they're different from our side. London is a challenge itself because obviously you've got the auto liability stateside, and they'll have whatever driver criteria or structure they've got. London, with all the different MGAs and carriers or syndicates, they've got driver criteria. And I do feel sorry for some of the TPAs we trade with because, you know, some of them just tweak them and say, you know, if it's 12 months to 24 months CDL experience and it's double deductible. Others say, oh, well, you know, it has to be 24 months. So different markets, and we do our best from and it's part of our job from a London broking standpoint when we see these markets and who we trade with, to be able to convey that to our client, who will have to convey that to the retailer and the insured to say, look, this is the difference between, you know, this option here and this option here. And, you know, if you pick this option, okay, it's got a higher deductible, but, you know, this driver criteria with this option means that, you know, if you hire someone that's got 18 months of experience, they're not covered, but they'll have to be specially agreed. Whereas if you went for this option, which is actually a bit higher, but, you know, you're covered with a double deductible if they've got 13 months experience because they're doing 12 to 24 months. And it's our job as a London broker to educate our clients on the differences of these. And that's whether it's a Lloyd's quote, whether it's a non-Lloyd's quote. And it's just part of the process of what we're able to convey with what we're doing, and also trying to find the terms that suit.
So now I'm almost wondering if you're more of a storyteller or a matchmaker. You gotta be able to tell the story as it relates to the data, right? And the data tells stories sometimes differently than what people think. You think the London market is ready for big data to help shift some of those kind of what I will call legacy wheels decisions that they make?
Very much so. The Lloyd's Lab is in cohort 10 now. I think they've done a fantastic job with Ed, and then obviously Rosie, who's running the Lloyd's Lab now, with the innovation they brought in, Parcel being an example with all the COVID vaccines and what Parcel's done on that side. Roadshaw, another entity there, Coupe AI on the autonomous trucking and sort of that sort of next step. Obviously, you're in the Lloyd's Lab with risky business, but it's syndicates and the uptake and people trying to push forward from an innovation standpoint is what we need to do as a market anyway. It's down to us as the brokers as well. We can't just rely on the syndicates to be the innovators. If we can find something that benefits the market as a whole, I think it's down to us in London. And although, we say London brokers, we all compete against each other, etc. But at the end of the day, we are all London. And, we had a meeting yesterday where, we discussed wordings, and it was more Christopher and Colin Bird, who I actually first started broking MTC to back 7-8 years ago, discussing where the broad form 15 and all the other wordings came from. But, London needs to work together to an extent at some point to push forward. Otherwise, you're going to have like an imbalance between people that are pushing forward and then people that are doing it, more of the traditional way, where there's nothing wrong with the traditional way, but there'll be a sort of leap forward. But then, depending on how that goes, people will follow suit, or they'll find another way to handle the business.
Yeah. I agree with you there. I've seen tremendous. We mentioned the lab, right? That was an amazing experience for us. And Rosie, I'll be doing a podcast with her as well, so that'll be a good one.
And even with the start of broking, if you talk about technology and innovation going forward, there's some good outfits out there at the moment in the transportation side. Decker seem to be doing well. KP Broking. It's just a start of broking that's happening with Lloyd's, with handling that smaller type of business that normally would be a transactional type of business. And when I say transactional, I mean the smaller insureds that are coming across with the that 1 to 20 unit space, and innovating that space from a London broking standpoint. If we're focusing specifically on that, they've done good jobs being able to streamline the whole policy issuance. And when I say that, talking about, and I was explaining it this morning to one of the new joiners about, and this I say it makes me feel old, but 3 years ago, printing off like a whole wad of paper for all these different accounts, going into the market, you'd go and see people like James Fleming, Marcus, and the rest of them, and you'd queue up, for an hour just to see them to handle these risks. And it'll be snowing outside, but you've got to walk across. You go and sit there, you queue for an hour or queue for half an hour. You sit down, you do the broking, you come back to the office, you look at terms, you put them up to the client. But now a smaller business, there seems to be new efficient ways of handling that through online portals. And then obviously, the next step is from a broking standpoint, and what I'm thinking is, can we connect those online portals to the data from our side? So as a London broker, we're being, for our markets and syndicates we trade with, so we can be more, enhance our broking offering to the London market to help our underwriters, but then also do a better job for the insureds and our clients.
Yeah, and you hit on something. So my numbers on these statistics are going to be a little bit off, but not much. The statistics on the trucking industry here in the States is something like 98% of the motor carriers, the interstate motor carriers here in the United States, are 1 to 5 units. And it's something ridiculous, like 99.8% of the fleets here in the United States are less than 20 units.
Yeah, I think 80% I think it is under 1 to 20 units, and that's a big old chunk of business. I know Progressive writes a ton of it, but our job from an efficiency standpoint, and we haven't been the best of it in Lloyd's. I think COVID, as bad as obviously COVID was, but from a technology standpoint, from the Lloyd's of London, it has brought us forward in terms of streamlining and making us more efficient to handle that business.
now we're gonna drop down a level in the insurance supply chain.
Yeah.
Let's talk about the agent.
Okay.
So as it relates to risk and the trucking companies and how they perform, now obviously it's on the trucking company to perform well, but what role do you think the agent does play currently, has played historically, and should play going forward as it relates to how does this all fit? You don't have to. You can plead the fifth if you want.
No. Yeah, that's a hospital pass in rugby terms, that Scott. It's it just depends on the agency. Predominantly Lloyd's brokers trade with wholesalers. The wholesalers, coverholders, and that's who we trade with, and they do a fantastic job with streamlining the business coming in from the retailers and knowing what London wants, whether it's a fit for London or whether it can be placed domestically. But I assume you're talking about the retail side, or are you talking about the wholesale side?
No. I'm talking about the retail side. I'm talking about the one that's actually talking to the fleet.
So I'll use a company like TIA for an example, who were Coburn, and then they were part of Harbour, they're TIA. They've done a fantastic job, and they've been around for 30 years. They're one of my colleagues, Christopher's longest clients. They do a fantastic job in terms of educating the insureds and finding them the best products. We worked alongside them to provide that offering from London. It's founded by three brothers, but they're a great example of a great retail agency that have done an amazing job. And I've picked someone outside the Acrisure group, so I'm not being biased on that side. But I think, like with any company, you get different levels of skill sets or where their focus is. But predominantly, the retailers we've traded with, they've done a very good job in terms of understanding the product, educating the insured, and even then, there's so many different levels to it. And if I talk about it now and I talk about it in 5 years' time, my answer is probably very different. But some retailers specialize in the captive space, other ones specialize in non-fleet, other ones specialize in sort of the mid to large fleet. And they all have their niches depending on the way the operation of the retail agency's been run. So, risk and de-risking seems to be a good topic at the moment in terms of how they can help the insured to run better. Obviously, no one wants to buy insurance. We do it because we have to, even down to our own home car insurance. It's there. So I think, it's our job or their job to educate the insurers on what they're buying. And you're obviously going to get varying degrees of, depending on what retail agency it is.
Yeah.
Does that answer the question?
Yeah, it does. It does. I don't think you're a matchmaker or a storyteller. I think you're a validator. Dance very well. No, listen, I think it's, we deal with a lot of retail insurance agents. We deal with the program managers and the cover holders, right? And then we deal with the folks in London as well. So we have a kind of a really unique view of what happens all the way through that insurance supply chain. And I think it's a little bit of, I think the responsibility to educate that fleet actually is bigger than just a retail agent, right? I think that the right story, and I don't mean story like it's fake, right? Like the right story of what's happening needs to be told all the way down. I can remember back when I first started to establish my own credit, right? I had no idea what I needed to do to make sure that my credit was good, right? I had no idea. I just thought, okay, I'm just going to pay my bills on time. No, that's just one little piece of it, right? Yeah. And so these fleets may think, and even the agents may think, because they're not being properly educated, no, wait a minute, we have to look at all of these little bits and pieces to make sure that everything aligns properly. Yeah. So I think that story and the transparency is critical, right? I think for the London market to be able to see what's actually happening on the ground based on what they've signed on for is critical. I think it's critical for the program managers and the cover holders to explain to the agents what are the particular pieces that are being looked at when it comes to the risk for that program. And then I think it's up to the agent as well to then take that knowledge and pass it on to the fleet, and then the fleet to pass it on to the driver. And I think their transparency is critical because there's some. I mean, think about it. It's not just one thing. It's not just speeding. It's not just accidents. It's not just violations and inspections. It's everything, right? And I think that story needs to be told.
Yeah, and I like the way that insurance is evolving. I know they talk about the sharing economy space, but there are elements of it coming into the transportation space. And I like the idea that, you know, instead of just buying an insurance policy that's there to help you if you have a motor truck cargo loss or a physical damage loss, but I like the idea that there are elements to it that, you know, can save you fuel, and you've got the data there now to help you with fuel cards, or, you know, if you're harsh speeding and harsh braking, you know, it's going to wear out your tires, and this can save you fuel. This can save you X amount of money here, and, you know, if you don't brake as much, it saves you this much amount of fuel in the long run. So it's quite interesting now, the data and the telematics that's there that could actually help an insurance and transportation company as a business, rather than just say, oh no, you've had a loss, you know, here we can help you out with this loss. It help you've got the technology there now and the expertise in the industry where they can help insureds go from, you know, one unit as an owner operator or up to, you know, a 200 unit operation with that structure there that will help them run as a strong and viable business in America. They did a great job over COVID in terms of transporting all the goods around the country. I think it's 76% of the goods in America are transported by truck. You know, that's a massive amount. So obviously if they've got the structures in place and the technology's there, and you've got the retail agency educating them on de-risking, you know, they have, there's a lot more to it than that outside of our area of expertise as a London broker, but it's certainly good for the industry, and, you know, it feeds all the way back up to the chain from the insurance side.
Yeah, totally agree. All right, so I'm going to ask you one more question. This is a good one. And I told that none of this is rehearsed.
Yeah,
I refuse to rehearse. Yeah, we just go where the wind takes us, right?
Yeah.
Okay. So, what is? Well, before I ask you the question, I got to paint the picture of what it really means to be James Wells. You get up very early in the morning.
Yeah.
Every single day. You get into London. You run around all day.
Yeah.
Making matches, doing your dance, right? And then you have to go and you have to have pints, and then you have to go and you have to have dinner, and you get home really late at night every single day. I did it when I was there for the lab. It is exhausting. It is, you work your ass off. So with that being said, what is your favorite part of what you do?
It's the people in the industry. They really make it. It's, you know, people talk about the Sunday blues. Fortunately enough, I've never had them. You know, it's, even when I first came into insurance and I had interviews to come into it, it was the people that I thought, actually, you know what, this is the place I want to be. You know, you hear about people clock watching and everything else. I don't think I've ever checked the time in terms of thinking, oh my God, it's like 6 o'clock and I'm still in the office. But you know, whoever we trade with on a daily basis, you know, MGA side, syndicate side, client side, I'd say, you know, we're pretty fortunate that we trade with like-minded people that they're very intelligent. They know what they're doing, and it's a very nice industry to work in. So, you know, we're very privileged to do what I do. Same for the people we work with. Yeah, so that's sort of the sort of driving force, and it's, the days fly by basically. It's but there's just so much going on. There's so much to learn. You know, I'll say Christopher, he's going to be 70 this year. You know, Christopher's still learning. I'm still learning. I don't think at any point you sort of look at it and think, oh, I'm done. You know, I've completed it. There's always something new. There's always something changing. We talk about new things coming into the market. We talk about innovation, like you said, you know, and, you know, 5 years, you know, even 3 years ago, I would have said, you know, this is the perfect way to do our business. You know, we're going into the market. We're going to get quotes. We're going to do this way. We're going to send out quotes to the clients. And, you know, we've you know, it's it's perfect. It's like nirvana. And then you come forward post-pandemic and the market's completely changed. And I would say this as well is we've got someone new that we've just week 2 and speaking to the markets we trade with, they're saying, no one's coming up to see us from a London broking standpoint. And, as soon as she's ready, it's going to be, let's go and see these markets. Let's go and meet the underwriters, because from a knowledge standpoint and from a learning standpoint, one of the benefits of Lloyd's and what it's done for 335 years is have all this knowledge in one space, in one room. And even the building itself, where it is 1978 to being where it is now, you've got the toilets, you've got the escalators, well, the escalators in the middle, but the elevators on the outside. There's so much space in the middle for going broking, and obviously for seeing those underwriters with that specialist expertise. And I don't want to fall into that trap now, post-pandemic, or even during the pandemic, of emailing quotes out and thinking, I'm so efficient. But there's so much knowledge to be had within the markets we trade with, seeing the underwriters we do on a daily basis. That is important for, younger brokers. And I technically I like to consider myself as young. But for us to still be in the market and going to see people rather than just emailing underwriters from our desk and thinking, we're broking, because I don't see that really as broking, because someone can sit on the other side of that email and just say, this is the price we're at. I've read your email. That's not going and negotiating a deal for our client. So, I'm looking forward to the market returning to a bit more of that on the transportation side. It doesn't sound like much of it has happened, but it's something that we're going to try and find a balance for from what we're trying to do at Acrisure London Wholesale, between maintaining a day-to-day, face-to-face relationship with our markets, but then also having the efficiency of technology. And that's probably a balance within itself. So, to answer your question, in short, it's the people. And if you're staying in the office the whole time, you don't get to see the people. So, it's great to be in Lloyd's. It's great to trade with who we trade with. You make some good lifelong friends, and you do a bit of insurance in the meantime. So, that's what keeps me motivated anyway.
Yeah, I agree with you. The London market's pretty cool. Meeting people face to face. You can see it right away when you talk to folks at the syndicates and the MGAs and all that. Like, it makes a difference, right? It makes a difference when they can look you in the eye and you can look them in the eye, and there's a mutual respect and a mutual understanding. It's a huge deal. I love going out there. Yeah,
and I'd say even as well from 3 years ago, a lot of the calls we'd have would just be over conference calls, for triangle phone in the middle of the room. To now thinking that we've taken a step forward with the video technology like we're doing here now, which is great, but you can't beat a face-to-face meeting. Being in the room, being in London, being stateside, it's pretty crucial for what we do. And it really gives you a good insight in terms of what people are thinking and how they're acting, and that again goes down to what we're doing on a daily broking side as well.
Yeah, awesome. All right, well, listen, it's been fun as always.
Yeah, it has been fun. I'm sorry for standing you up on Valentine's Day. I'll make it up to you, Scott.
You know what? I only cried for like 3 hours.
That before or after the Notebook? So.
Yeah, right. I will confess, I had to watch a sappy movie on Valentine's Day, but it actually was a good. So it was all good. It's all good. All right. Well, listen, my friend. I will see you in a few weeks. We'll be out there. We got some dinner scheduled. We'll have some drinks. We'll shake some hands, kiss some babies, all that good stuff.
Yeah, that's a pleasure.
All right. Well, thanks. Yeah, thanks for being on, James. Thanks for everything.
Thank you.
You're amazing.
Cheers. Thank you.
I hope you enjoyed our show today. Remember, when it comes to creativity and innovation, I always like to quote one of my favorite lines out of the movie Tommy Boy. If you ain't growing, you're dying. There ain't no third direction. My name's Scott Grandys. I'll see you on the next show. Peace.